One indicator, 4 uses, a lifetime of winning trades. That's what I'm going to show you today. How you can take this one simple indicator, put it on any chart using any asset for any strategy, any market, anywhere in the world, and instantly see an improvement. And I mean, that's what we all want, right? That one simple, easy to use thing that will finally help us see the light at the end of the tunnel. And what I will show you today can do just that for you. But you know what? It's more than just an indicator. It defines every single thing that we do as traders. When we buy, when we sell, when we hold, and when we run. It's like the diesel engine behind technical analysis. It's what makes it work in the first place. And if you're not using this right now, or worse, you're using it wrong, the market will drain you dry until you become just another statistic. And we certainly don't want that, do we? So here's what we're gonna do today. We're gonna start by discussing the basics as usual. That way we're all on the same page. And as I mentioned there in the introduction, I'm gonna show you how this indicator can help you do the following. And I'm gonna show that to you first. When you're gonna buy, when you're gonna sell, when you're going to go in heavy, and when you're going to stay out of the market. And if you think about it, isn't that what we're trying to achieve? Like if we can do that accurately in most situations, the sky's the limit, right? So that's what I'm going to show you first on how powerful this indicator is. But for those that stick around a little bit longer, I'm going to go much further with it because I'm going to show you how this indicator can do the following as well. Help you predict a bull market run before it happens, how it can help you predict a bear market, how to use this as a standalone strategy, how you can take the strategy you're using right now and instantly improve it overnight, how you will always find yourself on the right side of the market. And for all of you out there that are studying in that study phase right now, experimenting with indicators, experimenting with concepts and strategies, how anything you touch from here on out, you'll instantly understand, oh, I get it now. It all makes sense. And once it makes sense, you can make money. And that's the point. Now, if you look right there at the top, I've also got written, it's not just an indicator. It's a tool. That's the beauty. It's sort of an all-in-one type of indicator that can answer all of those questions. So for example, if you're using a VWAP or a moving average, those things are great for like data points, and you can manufacture trades and control risk on them. But they don't answer all of these simultaneously, okay? So what I'm talking about here today, to get down to business, is something I'm sure most of you have heard about, and that is range. You might even be using range. You're like, oh man, I already know range. But if you're not making money with it, you don't know it. You don't know it well enough to really change the way that you trade. And to me, everything starts with understanding this concept and indicator first. Now, I'll give everybody the technical definitions. I'm definitely not somebody who's into that kind of stuff, but hey, people want to know. It's basically the difference between the high and low prices over a specific period of time. Very vague definition, but how about we throw that one away and take a completely different look on what this actually means. Here's how I look at it. I'm not saying I've got the holy grail here, but just the way my viewpoint is when it comes to trading. Hopefully it helps you. To me, it's what something is worth at that moment in time, because that's what we want to know, right? Like if I buy the NASDAQ, if I buy Tesla, Apple, Google, gold, Bitcoin, I want it to go higher. But I want to know how much value is in it now. Like, am I going to get paid on this, or is now not the right time? So everything that you trade, especially for the day traders, you have an expected value. If you're trading things that don't have expected value or the lack of potential, this may sound advanced, but I will break this down for you. You get into terrible trades. There was something that was taught to me a long time ago, is that professional traders can't read crappy charts either. What separates them is they're able to pick the best stocks, pick the best assets. And how they do it is because they're looking at range. They can tell quickly, and I'm going to show you how to do it as well. Also, the huge part, markets are totally emotional, irrational, and hardly ever make sense to a certain degree. It can help you distinguish the level of the participants, that emotional level. So kind of a fast forward. Excessive ranges is a sign of volatility. Volatility is a sign of a highly emotional environment. Things are going to work different. You're going to get radical moves. You're going to get crazy rug pulls, huge rallies. The market's just going to look crazy. You've been in situations like that. You're like, wow, this market's nuts. Volatility, excessive ranges. Tiny, wee little ranges, small ranges, complacency, comfort. not a lot of excitement, not a lot of emotions. And man, there is a monstrous edge here on doing it. So what we'll start with first is how about we decide, well, how do we measure this range? How do we look at it? And then break down the basics and move to the more advanced stuff. So on your screen here, I've got a chart of the NASDAQ, just a daily chart. This is where I begin with it. There's three ways to do it. One is with your eyeball, which I would assume most of you would not do it that way. The second is the ATR indicator. And third is some sort of measuring tool that your brokerage platform may have. At this stage of 25 years, I'm just in the measurement. I can look at it. I've traded the same things over and over again, so I'm aware of what their daily ranges are. But for example, daily chart, NASDAQ, take a look right here. Roughly the high, roughly the low. I've gone through this before with things like the box theory. If you take a look right here, you got roughly 21,200 to 21,600, right? So you got about 350, right, to 400 points. And if you look at this candlestick right here, it's about the same size as that one, the same size as that one, same size as that one. Give or take, as I always say, technical analysis is not literal, 300 to 400 points, right? If you take a look at the ATR, which is probably what most of you should use because it's faster and you don't have to do that, it says 300 to 400 points. You can see, right? 300 to 400 points. And if you're using something like TradeView, you have a price tool right here. It's under this icon right here, price range. You can just measure the very bottom of that candle. And it doesn't have to be accurate. It's just a gauge. There it is, 300 to 400 point candles is what you're getting. So that is your daily range. Now, just real quickly, I can show you that if you see on a chart these moments like this where it's far excessive out of that range, that would instantly tell you something went on that day. That had to be like a Fed meeting. That had to be a political event. There had to be something that was a catalyst to drive the market in excess of their range. Excess range equals volatility equals fear. And ever since that, the market's been going down. Just a little hint there. So that's what we start with. Here's the easy part, which I explained in the box theory. Let's say that the top is, let's say 350 to 400. I'm going to give you a very easy example on how just those numerical combinations will save most of you right now, okay? You wake up, you're trading the NASDAQ, for example. You wake up, it's 350 points in the green. That should tell you, you probably shouldn't start buying right out of the open. Like if you get FOMO, you don't want to buy that. Why? Chances are you've already chewed up 90% of your range. There's no expected value to the upside at that moment in time. Remember, as traders, we also deal with time. So this would immediately tell you not to buy at the open. I need a pullback at least to buy. Now, if the pullback isn't deep and you buy it, you would already know, I don't think I'm going to get any more than 15, 20 points out of this because they've already chewed up the range. The market's gotten ahead of itself on a very short-term basis or whatever you're trading. Same thing to the downside. If you're down 350, you're down most of the range, your first move out of the open is not to short. You need a bounce to short. You see how it gets you on the right side? And that helps you figure out the trades. Here's what it really helps a lot of you with. Let's say you're already in this thing long and you're up 300 points. You're not sure if you should sell. Well, you should be thinking that maybe you can collect the extra 100 points to the top side of the range. Hopefully that makes sense. If you're short, maybe you'll get the bottom of the range. Like, see how this can make you more money? What if you're upside down on a trade like we are sometimes? This can tell you that, well, look, I need to wait to see if this range holds. Like if I buy it and it's down 350, then I need to see the buyers come in down towards the base of the range. I'll hold. This thing can clear up so many of your problems just right with that. Like if you turn this thing off right now, which I hope you don't, you're going to do better with just that kind of thinking and knowledge. So now I got something special for you that will give you an extreme edge because you guys are special people. You deserve to know. I'm going to try to do this the best I can in terms of explanation. Usually, only one continuous move is only 30 to 50% at any given time under the most extreme situations of the overall range. Okay? So here's what I'm explaining. I'm going to try to do a little Michelangelo technical drawing here. If you're moving up or down continuous, let's just say we're moving up. That move, if your daily range, let's go with the NASDAQ, is 400 points, that first initial burst would not, in most cases, be more than 120 to 200 total points. Now, here's how this helps you. We all suffered from FOMO, and some of us still do, right? We've gone through this battle. We see all these green bars piling up, all these red bars going down. We start to panic. But what we often do is we do that because we don't trust that it's going to pull back. And we're not looking at the range. And usually when we buy it, we get cheesed and we're like, what happened? Because we're at the top of the range. We're making a huge mistake. Let me show you an easier way right here, how this whole thing takes on a new meaning. I'm going to pull up the 5-minute chart right here on the NASDAQ. Let's spread this out for a little bit, okay? And let's take a look at what we've got. Let's just focus in on these moves right here. So I'm going to get the measuring tool to make it a little bit easier, but if you take a look at this right here, okay? From here to the very top of that is 200 points. So just focus on 200 points. But if we back that down, take a look at each one of those moves. It actually, you might not be able to see it. I'll try to expose it a little bit bigger when I edit it. But the first move peaks out at 100 points, right? Right there, 100 points. Then there is a pullback of about 30 to 40 points. So it's 100 points up, 30% of that, right? You get a 30-point pullback. Hopefully that makes sense. Then you go up and you pull back again, and then you go up. So there was actually 2 pullbacks on the way to 200. Stop right there. Instead of chasing that move, wait for the pullback. So now you have some sort of mathematical number in your head based off of what you're trading to get you on the right side. If we go over and we measure the other one, right, a very big aggressive move, you know, here you have 300 points, right? So it's a little bit more aggressive. By now, you should know with range, something must have happened that day, right? You don't even need to know what the news was or what it was. You know it's excessively high. So something had to be a catalyst to even create that move in the first place, right? But take a look, same thing. It moves up roughly 150 points, one half, then pulls back, runs another half. So here's how you could use that in terms of making better trades. We all wish we could get in at the very bottom and short at the very top, okay? You're going to get these moves a lot where you miss the initial entry. Instead of getting pissed and revenge trading and panicking, take a look at the range. So for example, in this case, it might be a move you wish you would have gotten earlier, obviously. But when you look at the overall range of the NASDAQ, I'm going to use that just as an example. It's 400 points. So if I went up 100, it doesn't mean there's no more money for me to make there. I just have to sit still, wait for some sort of measured retracement, 30%, 50%, some sort of nice pullback, and then try to get in that trade. But here's the difference. If that move, let's say I'm going to draw it here, for example, just standard flag, easy stuff. It rallies. I'm mad that I missed it. I need to wait for a pullback. It could be very shallow. It could be 30 to 50%. And then it starts to move back up. I could buy that if there is still a couple of 100 points left in potential range in that instrument. So let's say this was only 150 points. That's fair. But let's say this move from here, this initial flagpole, right, is 380. I wouldn't buy that flag, right? You've chewed up too much of the range. See how that makes sense? So you'll notice that you can actually measure these. I've done a video before about trading is just math. It's like these mathematical equations. So let me show you how this works for better or for worse. I'm using this trading view. I'm going to do the playback, and I'm just going to go down to the bottom and select a random date or a random bar, right? Select a random bar anywhere they choose where it is. And you'll see right down here is the times. I am on the West Coast of the United States. So the market will officially open up here, or the opening up time is 6:30 a.m. for me. Now, before I do this, I want to make a couple of things clear. This is a playback. It's connected to my TradeStation account, but this is a sim. Okay. I'm just trying to explain to you range. I want to make that completely transparent and clear before I go through this. I'm going to be making trades based off of what I had explained to you. So there is no candlestick signals that I'm going to use. I'm just going to measure that range and make choices off of that. Now, obviously that won't be as accurate as, adding candlesticks, wicks, and all those other things that we discussed, but it'll give you an idea of how powerful range is. And this is the NASDAQ, so we've discussed 400 points as the range. I'm going to move this forward just a little bit here so it gets closer. You'll see at the bottom, it's 3 o'clock in the morning. I want to get a little bit closer. This is the time they gave me. I'm not very good at this platform. Get closer to 6 a.m. right before the market opens. You'll see it's right there at the bottom of the screen. Okay, that's good enough. What time is that? All right, 5:20. Let's go a little bit further here, just a touch further. All right, that's good enough right there. Now, I want to back this out. The way I like to do it here, this will give you a top-down approach on how I look at trades every day. But if you look at this here, let's just go back and measure the nearest moves. You'll see whatever this was here, 200 points. That was half, right? Then it bounced 200 points. And then it fell back down 136. You've got quite a bit of volatility, a little V-shaped pattern there. And obviously, you guys can look over to the right, and you can see there was a pretty big move here. But I want to focus on that 200 points. So here is a way I prefer to use it. If I come back here and I measure this moves, and you'll see this a lot. You sleep, you wake up, you're like, damn, they're ripping the market. So I'm going to measure the base of this, which was about 3 o'clock in the morning, up to where we are right now. Okay, let's take a look at this right where we are now. Hopefully, let me back that down one more so you guys can see it. Okay, all I want you to focus on is the 189. Based off of what I said, tell me what you think. What do you do here? That's not a buy. That is not a buy. If you want to buy it, it may go higher later, but you don't buy that, because you've already consumed half of your range. And this, according to the time there, the market's not open. So think about this. Let me just back that up. What kind of emotional level, like I don't even know what day we're on. What kind of emotional level must be happening for somebody to be buying a 200-point gap up in a market before it's actually officially opened? See the clue? So I would say right here, let's move this forward. This would be a sell. This would be a sell. I'm going to, let's just let's see what happens as the market. I'm going to sell that. Sorry, I got to stop this thing. It's moving so quick. I told you I'm going to put let's sell that based off of range and just play it out. Just play it out and see what happens, because the odds here, okay, let me just make sure everybody's on the same page. Obviously, I can see there's a top wicked candle up there. I'm just playing the range. I'm just saying in this case, right? I am guessing here based off of range. I don't have any signals. I don't have any news for that day. I'm randomly trading a series of bars here, and I'm just measuring the move and saying, I am going to say that statistically speaking, mathematically speaking, you're not going to pull back up too much from this point because you've already consumed a big chunk of the range and the market's not open. Let's play it forward, see what happens. Okay. Now take a look. Something I want to show you here, maybe slightly off topic, but take a look at what's happening right there on the screen. Notice how the NASDAQ is struggling to build momentum above the range. That's the point. It's not that it won't later, but at the morning, you can see the battle that's ensuing towards the top. Now, I'm not doing a lesson on this, but I'm sure there's some sort of resistance there. You've got some candles there. You've got a lot of other detail there that could really solidify that. But just based off of range, it's not going to do it. Let's move forward and see what happens. Just kind of see how you can't, whoa, stop right there. Stop. Take a look at what happened. Take a look at what happened. You got rejected off of there. You were never able to break that range. Now, hopefully you're thinking what I'm thinking. I am going to close that out because this now is a what? It's a buy. It's got to be a buy now. Now you're buying it based off of that range. You see it right here. Let's measure. You can see it's almost identical. In fact, that's very close to that, strangely. Not strangely. But take a look at it. Let's just give it a shot. Now, obviously, I'm guessing on the range. I'm just guessing here. You would want to wait for more signals. I've already made that clear. In this case, you probably would want to stop there, but let's just see what happens in this case based off of the range. And the way I'm looking at this here too with the experiences, the NASDAQ has just dropped 200 to 300 points. What would it do that for, right? And they'll probably reverse it, right? And you're back up there. And I would say, I don't know, you get up there a little bit higher. That's probably, I mean, now look at the measured move there too. Let's get rid of this for just a second and measure that one. I mean, you're even further in there now. You're roughly 237. Yeah, heck, sell that, right? And then let's see what happens here. See how much it goes. A little bit of a struggle there. You see it kind of popped up there. Probably in a real market, you probably would have been stopped right there. But you can see it didn't even really go that far. Again, just a little drop there. All right, we'll just, yeah. Oh, well, look at that. Well, look at that. Anyway, probably in a real environment, you probably would have been stopped on that just using the range. But anyway, let's just cancel that out. The point is just look at the range, okay? That's all I want you to look at. Forget about everything else. How measuring that range creates so many opportunities. So if I go back and I start from the beginning, random day, this is like guessing. This is over time, this would be, you would need more than this to become successful. But let's just go with what we've got here since we're on the subject of range and trying to deliver the point of how powerful it is. This one right here, you wake up. First thing, you're up 200. It's a easy peasy lemon squeezy decision. You don't have to go for the short sell. If that's not your angle, don't do it. But you can't buy. You got to wait for the pullback, right? Now, this pullback was real deep, right? There was a couple of scalps in here for scalpers, right? You could have picked up these were 30% retracements, look, right? And of course, over here, there's tons of other trades in there by using candlesticks, resistance and support, all that kind of stuff. But look how effective range is, right? And you come all the way back down here. This is a gimme. Like once you see the range, it's like stop. You're going to go back the other way because it's too much range. Now, I don't know what happened here, why it went all the way back up there. This is just again a random day. I don't know what was going on. A unique kind of movement here, but it shows you that, well, I can't buy these, right? I have to play them. And I would say that's probably going to end up being a buy somewhere because of why? A range. Now think of that part. Like you will look at that and say, that's probably going to be a buy. I should be sifting around here, maybe at this spot, at that spot, another spot around it. I should be looking around there somewhere to try to buy. Again, just all that's hypothetical, but hopefully you can see, look, just throwing darts with range measuring gets you on the right side of the market. So hopefully that makes sense. Now on that note, I'm going to go ahead and just finish the video right there. I want to remind everybody that, if you're really looking to accelerate your trading to the next level, every week we do a watch list. It's free. We talk about the best stocks to trade with the best setups, using these range tools, using things like the check mark, using all the strategies we have. It's got clear, defined entry, exit, and buy points. And as I said, it's completely free. On the screen, there'll be a link there. You can follow therumors.com. Make sure you sign up. Would love to send this to you guys, and hopefully it helps you make money. And on that, as always, make sure that if there's anything that you want to ask me personally, put it down there in the comments section. I appreciate you watching this video. Hopefully I was able to make sense out of trading. Hopefully you can take what it is and use it and start to make money with it. And on that note, take care, trade well. See everybody soon. Cheers.